And I'm going to turn it over to Mel. And so this will be available on our YouTube channel when we are done. And if you have any questions, I mean, there's just a few of us, so you can probably just pipe up, or if you want to pop it over into the chat, I will then relay it to Mel. But without further ado, as I said already, I'll give it over to Mel.
All right, thank you guys. That's like the first thing I want to say is thank you, because Sean and I were just talking about, it was like this snuck up on me being a holiday weekend. I was just earlier this week, I was like, oh my gosh, it's Memorial Day already. So I'm sure that all of your breweries, if y'all have tap rooms, are going to be slammed, just like Adam said, with 3 bands. So thank you guys. I think on a Friday around noon to listen to a webinar about accounting and finance might not be top on your list, but hopefully it'll be worth it for you. So I'm going to go ahead and share my screen. All right, can everybody see my PowerPoint?
Yep.
Yes. Okay, perfect. All right. So, so today we're going to talk about month-end close best practices. And really the whole goal of month-end close is to improve the accuracy of your financials. So making sure that you can actually rely on your financials to make decisions. So we'll go through a little bit of introduction. I'll introduce myself and hopefully learn a little bit more about y'all as well. So hopefully you're willing to participate a little bit. And then we'll talk about the importance of month-end close, what it takes to actually complete the process, including reconciliations, and then also the review process. And then I'll leave, I'm hoping to leave a little bit of time at the end just for Q&A, and not necessarily just about month-end close. Like you ask me any financial related questions, not technical brewing, definitely can't answer that, but financial related questions, I am definitely here for you. So introduction, like Sean said, my name is Mel. I'm a CPA. I actually work remotely for Perkins, and I'm based in Sheridan, Wyoming. I do have some family who actually live in Florida, so Florida holds a special place for me. And I've been working at Perkins just for a little over a year now, but my history has been spent in the brewing industry. So I started in public accounting and just like long enough to get my CPA basically. And then I worked for a large manufacturing company, an international manufacturing company. And from there, I just pivoted and went straight into breweries. And so I've always loved craft beer. I've always had a passion for it, but it was really fun to kind of commingle that with my career. So I'm definitely enjoying my career a lot more. When I call myself, you know, if you're going to be an accountant, this is probably like the coolest version of an accountant you can be if you get to work with craft breweries all day long. And the industry is so amazing. Like, I just can't say enough about how awesome of a community it is, how supportive of a community it is. And the people are just so passionate. So that was really, I got recruited to go to Perkins. If anyone's heard of Maria Pierman, she wrote the BA's book called Small Brewery Finance. So I'd worked with her in the past, so she recruited me to come work at Perkins, and I love it because that is part of my day-to-day job, is getting to spend time with my clients. So I work in the client accounting services group. So Perkins is a full service accounting firm. So we have audit, tax, business valuations, like wealth management. We have like a gamut of services, but they do have a craft beverage niche. So there's like a tax team that works just on craft beverage. There's an audit team. And then we have this cool group that's called Client Accounting Services, where we do outsourced bookkeeping, outsourced controller and CFO consulting. So I love it because breweries in the size of our target market, which is small, you know, to medium size, we kind of work with upwards of like 30,000 barrels in production annually, don't necessarily have the capacity or the need for a full-time, you know, CFO or controller. You know, if lucky, maybe some of y'all are this. if you're lucky, then you might have an owner, someone sitting in an ownership seat or a board of directors role or an investor role that has that background and knowledge, which is pretty invaluable. But if not, there's, you know, people like us at Perkins who can always help you out. So now I'm going to turn it over to y'all, and you can either use the chat or pipe up. Feel free to do either. But I want to just learn a little bit more about you guys so I can kind of tailor this class a little bit more to, you know, not go in too much into the weeds if that's not what you need, or maybe delve a little bit deeper into the weeds if that's what you're interested in. So first question is, are you doing the bookkeeping or in accounting, or a member of your staff doing it, or do you have an outsourced third party that does your bookkeeping?
I'll chime in. We have our partners handle the accounting for our business accounting office.
Oh, great. Okay.
We actually have to provide all the bills and expenses and everything like that to them. So,
Okay.
we're able to, then we go in at the end of the month and we, go through the P&L and everything like that and all the bills and make sure everything matches at the end of the month. So.
Perfect. Awesome.
Liz here, I'll chime in.
Go ahead.
Liz here from Legacy. I handle all the bookkeeping and the day-to-day, bookkeeping needs. And then at the end of the year, I kind of wrap it all up and send it off to accounting. And then they handle our taxes and their end of year stuff.
Oh, great. Okay.
Okay, this is Andrea. I have an outside accountant who takes care of the books, but I need more insight into like where the numbers should be and where we can improve, reduce expenses and obviously
Yep.
increase sales.
Yeah, that seems a trend right now. I'm seeing that across all of my, this has just been an odd year. I feel like I'm going over this with all of my clients right now. And I don't know if it's similar with y'all, but it just seems like sales aren't quite meeting expectations. And, with the increase of raw material costs and other expenses, it's hard. Being a brewery, it's hard to make money. So, really looking closely at your books can help you at least gain a lot more data integrity, a lot more accuracy so you can analyze your numbers a little bit more and see potentially where there are some areas that you can make some changes. And then, okay, last question. And two more questions. Sorry. Oh, I have a few more questions. I'm just skipping over things. I get excited about accounting. So do you guys I'll ask this one because I'm glad you guys gave me a little bit more background on where your accounting stuff or where your accounting tasks are held. So 2 more questions is, do you guys use a production or inventory management software? So something like Beer 30 or Ecos or Orchestrated Beer even maybe, or do you just use a mix of spreadsheets? And then also, what is your current favorite beer style that you're drinking? And bonus points if you have like a beer that you've tried recently that you really love and want to recommend.
I'll chime in on the accounting software.
Yeah.
We use a combination for inventory management at the brewery. On the brewery level, we use Ecos.
Okay.
But we then pull reports for the accounting, back-end accounting that goes into Restaurant 365, which is the accounting software that we use.
Okay. Gotcha.
We're pretty small and we don't distribute. So we actually just handle inventory management manually via spreadsheets and that sort of thing. And then on the sales side, we actually similarly, we use a lot of reporting from our Arrive POS system.
Nice. Yeah. Yeah, I love Arrived.
I have mixed feelings about it, but that's
Do you?
another webinar. That's a webinar for another day.
Yeah, right. Yeah, we could chat offline, non-recorded on those. No, I'm just kidding. And Andrea, what about you? Was that you, Andrea, or was that Liz? That was Liz?
Yes,
that was
this is Andrea. We use Arrive for POS and are kind of implementing Ecos. Haven't gotten very far into it yet.
Okay. Gotcha. Awesome. Well, thank you guys. And if you decide to enter any beer suggestions, you can put them in the chat. So that's great. That's good background. Most of my clients are either on Ecos or Orchestrated, and there are a handful that I work with that just use spreadsheets. So I've had experience with them all. Okay, let's dive right in. So basically what exactly does month end close mean and why is it important? So your financials can really tell the fiscal story of your brewery. So you're potentially handing over financial statements to owners, your management, lenders is a big one right now, potential investors is another big one, and of course your board of directors. So your financials are telling them the health of your company. So in order to be relied upon, they definitely need to be complete and accurate. So when I talk about financials, I really just mean the big three. So your balance sheet, your income statement, or your P&L, and then the not as frequently talked about statement of cash flows. We're going to really focus on balance sheet and P&L, which those being accurate drive the calculations to your cash flow statement. So we're not really going to touch too much on like review of the cash flow. And also, if there's anything, I'm more than happy to, come back. And so if there's anything specific that you guys want to go over, like, deep dive into cash flow, I'm sure that's what everybody wants to do. We'll wait for the next holiday weekend for that. Then yeah, feel free to let Sean know too. Okay, and then financials really are a tool that you want to use in making your strategic business decisions. So if you're looking at expanding, I see a lot of people looking at potentially getting a second tap room, adding a second tap room or second location, or sometimes, especially I feel like this time of the year, hopefully people are kind of coming out of that, but it's the cyclicality of our industry, which if you're struggling to pay invoices timely because of lack of cash flow, or maybe if you're one of the lucky few who have excess cash flow and you're wondering how to invest, potentially adding additional labor, more employees, or building your marketing budget. So making sure that you have all of the data entered so you can really analyze and make the best decision for your company. And so it's really important that they're accurate. Okay, so steps to improve your data integrity. So creating a solid month-end close checklist is big, but the more important thing is actually following through with it, sticking to it, and actually doing the tasks. So, and why do I say monthly or quarterly? So you can have a mix of both. Breweries tend to operate very lean, and typically you don't have the resources to dedicate to or invest really in accounting. And so some of these tasks you can perform on a monthly basis, and I'll kind of give you the ones that I feel like you should definitely do monthly. And then you can kind of hit those big ones monthly. And then some of the ones that can be a little less time consuming on the month, or maybe it's more efficient for you to do them on a quarterly basis. You can push some of that stuff to the quarter. And in terms of timing, so when we talk about month-end close, the timing should really be aimed to complete all of these tasks by the 10th day of the following month. And really that is just based on timeliness. The further you get away from the month end, the more that information is like a black hole and the less likely you are to be able to like resolve potential issues the further you get away from that month. So trying to really complete it right away is big. And then, so as we go along, feel free to stop me, feel free to ask questions, interrupt me. That doesn't bother me at all. And let's hop into the nitty gritty. Hopefully you guys are excited. Okay, so kind of high level overview of month end. So steps to close the month. So you want to first finalize all of your transactions. So like we were talking about before, I think Adam was mentioning, is making sure you're looking at all open AP invoices that need to be entered. So maybe there's a stack of mail on your desk or in a mailbox somewhere, making sure you're going through all of that mail and you're entering your AP invoices in the month that they incurred. So even if you receive them on the 10th day of the following month, but the expense relates to the prior month, date those suckers back to the month before. Inventory. So making sure inventory has been received. So if you received something late on a Thursday night, that was the last day of the month, making sure that was received in the month that it was received and not, the next day. And so it doesn't split those months. And then any activity that needs to be processed related to production. So Ecos makes it pretty easy, but you just want to make sure the dates are accurate. And if you're keeping track of everything on a spreadsheet, then just making sure that you're recording all those inventory transactions in the month that they occurred. And last, which is I feel like a big one, can be a big one in Ecos and OBR as well, is making sure your deliveries or customer pickups were invoiced on the day they were delivered. So your invoice isn't dated a couple months or a couple days after, because if it can be a big issue once you're splitting that month when you're actually starting to look at your P&L. And then reconciling your balance sheet is the next step. So going through all of your balance sheet accounts and reconciling each step. So counting your inventory is big. We'll talk about inventory in a little bit. And then adjusting those inventory balances, especially if you're using spreadsheets on a monthly basis. And then final kind of step of month-end close is reviewing your financials. So first step is reviewing the income statement, and more so in depth is going to be reviewing your COGS and reviewing your margins and making sure those are accurate. Okay, let's take a deeper dive into balance sheets. So this is where most of the work takes place. This is the bulk after you kind of do those like closeout tasks. So after you get all the transactions entered, this is where the real true work takes place. So if you're not reviewing your balance sheet regularly, I see this a lot in clients who come to us who are wanting us to like help them clean up the books, or maybe they had someone who wasn't an experienced bookkeeper preparing their books or doing their bookkeeping, and everything's kind of a mess and they don't really know what's in their balance sheet. This happens a ton, and there could be items on your balance sheet that need to be adjusted and then recorded to the P&L. So anything that's on your balance sheet that shouldn't be needs to be flushed through your P&L. So it's really important to review this regularly. So it's a very common place for things to get stale. Like, I mean, luckily it seems like you're all using great POS systems, so this helps prevent that. But if you have a gift card liabilities account, I've seen those just kind of like keep getting higher and higher and not being adjusted out. Prepaid raw materials or hot contracts just kind of sitting there on your balance sheet. Keg deposits is also a really frequent one that I see just not being reconciled. So that you never really know what's included in that balance. So basically, as far as your process, you're going to go down every single account of your balance sheet and perform a reconciliation. So, and that means something a little bit different for each account. So we'll start with assets. So with your cash account, so your checking, savings, money market accounts, petty cash, till cash, you want to make sure you're looking at each one of those cash accounts and also reconciling them to your bank statement. So if you're using QuickBooks Online makes it like insane easy if you're using the bank feed. So if you link your bank account in QuickBooks Online, it essentially reconciles your transactions for you because it matches your bank statement with the transactions that are coming in. If you're not using QBO, or if your accounting system doesn't handle that for you, you just want to make sure that you're matching every transaction that happened in your bank with what actually happened on your general ledger or in that cash account on your balance sheet. And if there are items outstanding that hit your bank statement that haven't been entered, make sure those get entered. And then if there's items that are stale, outstanding items that are on in your cash account on your balance sheet, then just review those for accuracy, because sometimes they can be, a check hasn't been deposited yet, totally okay. Or maybe it's a check hasn't been deposited for 120 days, not okay. Maybe we should look at why. Do we need to reissue that check? Maybe, or maybe it needs to be canceled. So just reviewing that. And this is something I definitely recommend doing every single month, because the amount of work can add up quickly. And what could take you an hour every month then could take you, 10 hours if you wait till the end of the quarter because you're looking back so far. Savings and money market accounts, you just want to make sure you're recording any interest. So any interest income that you receive from those. And then petty cash is something I see neglected really frequently as well. And this is something that you can have quite a bit of expense running through a petty cash, just depending on your processes, that isn't getting recorded in the time that it actually happened. So when that expense actually happened. So, one of my clients frequently, they have like an Ace Hardware right across the street. And so they're frequently just using petty cash to run and grab, miscellaneous brewing supplies or repairs and maintenance stuff from ACE. And so frequently those things don't get entered into the system. So making sure that we want to match our expenses and our revenue. So making sure that those are getting recorded timely, and also counting your petty cash. So really taking the time to say, okay, here's what we started with. Here's all the expenses that happened. Here's what our ending balance should be. And then what is the actual amount of cash we have on hand? I'm sure y'all are very, do that very routinely for the cash that's in your till, but maybe if you have a separate petty cash, it might just not be done as frequently. And then accounts receivable, really important to just review your AR aging. You want to make sure that your AR aging schedule ties to, and that I should say the balance sheet I have up here, this is just the asset section, and it's just a random example. But so yeah, for your AR, you just want to make sure you're reviewing your aging, make sure your aging schedule matches your balance sheet. I've seen sometimes where stuff has been like something got manually entered there incorrectly, so it won't show up on your aging schedule. So just making sure that it's clean. And then it's a great opportunity to just, if you do distribute, then looking at your distributor accounts, do you have outstanding amounts that you need to collect from them? And then moving down to the big one, my favorite is inventory. And the hottest topic that gets debated quite frequently is counting inventory, because it's a huge pain in the ass and can be very time consuming. So you want to make sure you are breaking out your inventory on your balance sheet. So you want to make sure you have raw material, an account for raw materials, an account for, I prefer a separate account for packaging because I think it just is cleaner to reconcile, but I've seen raw materials and packaging combined a lot. Your WIP account, and then your finished goods account as well. So you might also have, like, if you have like a food truck on site, or maybe you serve food, you'll have a food inventory account. If you're accounting for your food inventory, I see a lot of people just, when they buy food, just push it onto the P&L and don't worry about tracking it on the balance sheet. And then also merch, if you have a lot of merch. I know Arrived makes it really easy. I haven't used Restaurant 365 a ton, but I know Arrive makes it really easy, at least if you track your merch in there, to have your journal entries. And then mainly the transactions that happen in inventory are driving your cost of goods sold, and which is driving your margin. So at least I'm sure most of us do this. Hopefully you guys are doing this, is analyzing your margins monthly and seeing, if there are variances, why there are variances, because that is where your profit is being driven. And so really looking at your margins closely is huge. And any transaction that hits inventory is what is driving your COGS, and so ultimately your margin. So this is where I usually spend, or can spend, the most time, depending on the software.
Yeah. Sorry, a quick question for you regarding the dollar value that you're putting in for these inventory items. For raw materials and retail merchandise, are you putting like the actual cost that you spent acquiring them, or are you putting in their retail value?
You're putting in the cost to acquire them. So that's going to include any shipping, also the shipping to actually get the inventory to you. You want to make sure you're including all of that cost in inventory. And then the retail side of it, well, that'll flow in through your revenue. And so then when you're actually moving your, like when you're selling merch and you're moving the cost, so the cost that's on your balance sheet, when you're moving that over onto your P&L, you'll have the revenue from the sale, so that'll be at retail value, and then you'll have the cost, and that'll be what shows you your margin on your merch.
And then as far as like the finishing goods and packaging, are you like, what value? Same thing, same question about that. Like, what value are you putting? Are you putting like at that point the retail value of that finished good?
No, but it's all, balance sheet is all driven by cost.
Okay.
Yeah, so exactly what it costs you to get those materials. Okay. Okay, and so the most important thing, it kind of goes along with that, is to remember to keep in mind the matching principle. So this this allows your P&L to give you a better and more accurate picture of your profitability. So you need to ensure your revenues match your expenses. So when that delivery is made, you want to make sure that, and this is, why Ecos can, and I say Ecos because that's, the one that I typically see being used right now. That's why having a tool such as Ecos can be so valuable, because it does all of this for you. It does all of these journal entries for you. So you're wanting to make sure that when that delivery takes place, so when the delivery takes place, that's when the cost of goods, so that's when the cost is being moving it out of your finished goods and plugging it into your cost of goods sold. And then when you initiate that invoice, that's when the revenue is being recognized. So you want to make sure those hit in the same period. So you're not looking at, for example, we're in May now. If you have a delivery that happened, actually, I don't know what day it is. Oh, the 31st is until Tuesday. I was going to say if the 31st happened over this weekend, that could be an issue. But say you had a delivery that happened on Tuesday, you go in and enter the invoice on Wednesday. So Tuesday's the 31st, Wednesday's the 1st. If your invoice is dated the 1st, then your revenue is going to be in June. The next month is June. In June, it's crazy. And then your COGS are going to be sitting in May. So you're not going to be able to appropriately review your margin unless those are in the same period. Okay, counting. So depending on how lean you run your brewery in terms of inventory, performing a full entire count can be a huge pain, like I said. And it's something I think that is easily pushed off. However, one of my clients I was working with last year hadn't done a full, and they were using Ecos, they hadn't done a full true inventory account and compared it to the values in Ecos in like 10 months. So when they did, they had $125,000 of inventory variances that hadn't been accounted for. So the only thing to do, that was inventory that was sitting on their balance sheet, but actually wasn't there. And that it can be a number of reasons, right? So like loss, like just general loss. It can be, like when you count inventory, you're always like off some, like not your count, but like you always just lose things break, they get thrown away, they like physically get lost. But if you don't do that for 10 months, I mean, these amounts just keep adding up. So Ecos is still showing them as being there. Your balance sheet is still showing them as being in inventory, but they're physically not there. So once you adjust that inventory out, the only way to push it is onto your P&L. So they had 1 month, $125,000 of COGS that, I mean, that's the only thing you can do about it is just flush it through your P&L. So it made that month look very terrible. But so that's what the importance of counting and doing it regularly, and not only counting, but comparing it to what is in either on your spreadsheets that you're showing in inventory or what is in your inventory management system. So you can we recommend to perform blind counts. So you give someone like a list of inventory and they have to go count it, making sure to not give them a guide, right? You don't want to have like, we should have, 12,000 of these labels, or we should have, 5 pallets of this specific can. You want to just say, go count these cans. And so that's also important too, to make sure it gets counted accurately. And then if you're using an inventory management system, another thing you need to be doing on the month-end close is pulling reports out of your inventory management system like Ecos and comparing those reports to what the balances are on your balance sheet. That is one thing that unless you have, historic knowledge in the industry or a history using like an Ecos and QBO or Sage or whatever you're using as your accounting software, there can be issues where something gets entered on the balance sheet manually in your accounting software that wasn't entered in Ecos. So say you purchased yeast, and instead of running that through your P&L, you're like, oh, well, it's inventory. And so you manually go to record it in your accounting system as inventory on your balance sheet. Well, Ecos has no idea that that exists. And so it's never going to know to remove that amount from your balance sheet. So it's going to be perpetually just hanging out in your balance sheet until it gets manually moved. So you're comparing what Ecos says your inventory should be to what QuickBooks Online or whatever your accounting system says that it should be. and any adjustments that need to be made. So if there are variances, you need to flush those out onto your P&L, because the Ecos, or if you have another inventory management software, that should be the truth. That should be your point of truth in terms of what your inventory balances are. And if you're not using an inventory management system, this is where it can get a little, it's just much more manual. So your spreadsheets just have to be a little bit more detailed. And so, like you've made the correct movements at the end of the month to move your raw materials into WIP, and to move your packaging in your WIP into finished goods. And then what has moved from finished goods onto your P&L into COGS. So a little bit more manual. If you guys have questions about that, I'm going to give you my contact information. So, I mean, feel free. Like I said before, that's one of the things I love about this industry is a sense of community. We're always here to help each other. So if you guys have little questions here and there, feel free to contact me. And so once you have your accurate inventory count, going to completing your Brewers Report of Operations, if you're a monthly or a quarterly file, so on the quarters, you would do this. So completing the Brewers Report of Operations. Luckily, if you're using something like Ecos, it's generally a press of the button as long as everything's been entered correctly. Knock on wood, I've seen that go south a couple times. And then making sure that you're calculating your excise tax from there. And so when you have that excise tax number, you want to make sure you're recording it in the quarter that you incurred the excise tax. So, I should say, I feel like we're coming up. I feel like we just ended Q1. However, we didn't actually. I was going to say we did kind of, but no. So in April, when you're calculating your TTB Brewers Report of Operations, calculating your excise tax, once you get your excise tax number, you want to book that invoice back into April. So at least you have, or I'm sorry, back into March. So at least you have the actual excise tax expense in the quarter that it was incurred. I do a lot of excise tax accruals. So each month we're accruing a piece of the excise tax that's associated to production for that month. But if you don't have something like Ecos, it's like, it would be inefficient generally, unless you have an easy way to pull that data. But again, it's usually so immaterial. It doesn't make it's not going to move the needle enough to where you have to add that as a monthly task. Okay, inventory is a big one. I know I was going to spend a lot of time on that. Okay, so other current assets. So these are things like prepaid insurance. If you have an insurance policy that you might kind of front load your payments. I generally see you pay for 6-month installments, even though it's for a full year. So then you can book your actual payments to a prepaid account, and you're making sure you're just expensing the pro rata portion every month. So your financials are your expenses are smoothed out over all 12 months of the year. Also rent deposits and dunnage receivable is kind of a big thing. So if you guys get reimbursed, if it is a significant part of your business where you're using a lot of dunnage and then you're shipping it back and getting a credit, if it is material, if it's quite a bit of money, then you're going to want to have that dunnage receivable when you receive it in as an asset. And then when you send it away to get the credit, then you decrease your asset value. But again, sometimes it's not even worth it because it's just not that material. So, and then making sure you're recording the necessary entries on those balances and you're just looking at them to make sure they look reasonable. Long-term assets, we won't spend a ton of time talking about fixed assets because it's pretty straightforward. So just double check the accounts, make sure nothing hit there erroneously, and then making sure you're following your capitalization policy. So whatever you have set as, $2,500 is a very standard one. So making sure there hasn't been anything entered in there that's under your capitalization policy and really should be recorded on the P&L. And then depreciation. Some people book this annually with the tax return, totally fine. If you do book it on a monthly basis, make sure you're just posting your depreciation monthly. Okay, liabilities. The last part is pretty quick. So the heavy hitter there was inventory. So similar, we'll move right into our liabilities with accounts payable, very similar to AR. Pull your aging schedule and just review it. Make sure there aren't checks that you wrote that need to be applied to invoices or just general data cleanup that needs to happen. Credit card liabilities is a big one because you want to make sure you're actually recording the expenses that you had within the month. So you record those expenses, and the other side of that entry is a credit card liability. And then when you go to pay your credit card account, you decrease the liability and then decrease your cash. So making sure you're recording those credit card expenses in the month that they're happening. And then of course you can tie those balances out to your credit card statement. Other accrued expenses and liabilities. So we get into accrued wages. If you do a payroll accrual every month, really you're just wanting to make sure that any expense that took place in the period, but you haven't received an actual invoice for, is being accounted for. So that's where you have these accrued expenses. And making sure you're reviewing other liabilities like your tips payable account, making sure that's getting cleared out with your, because if you're booking tips payable through your POS system, you want to make sure your payroll is actually removing that. Gift card liabilities, like I mentioned, sales tax payable. So making sure that you're reducing your sales tax payable. And then the biggest one, which is usually not a super material balance, but can just be tricky to track unless you have, like an Ecos, is keg deposits. So if you have, it's nice to have a schedule of keg deposits unless you have something like Ecos that can, you just pull it and it shows it to you. Because that Ecos communicates with your accounting software, so it'll automatically, take care of that keg deposits account for you. But making sure you're keeping track if you've lost kegs, like if you have a keg deposit that's been sitting out there since 2015, and you're not going to get it back, write it off, write that $30 off. And then also, if you own your kegs, then you probably have a keg on your books that you need to write off as well. So reviewing that every once in a while is great. The only thing you really have to look at with debt is when you're making your payments on your loans. If you have loans, if you're making payments on your loans, just making sure the principal and the interest portion of the payments was applied correctly. So principal is actually reducing the amount of debt you have, and then that interest expense is being booked on the P&L. And I put equity on here. Generally, equity doesn't change too frequently. If you are changing your equity, then you probably have something bigger going on, or somebody's putting in additional funds, and depending on the structure of your company, it can get really complicated. So generally on a monthly basis, nothing to review there. All right, how's everybody feeling after balance sheet? Good, maybe overwhelmed, hopefully not. Oh, it's a lot of info coming at you.
Pretty good.
Okay, awesome. Okay, great. All right, let's move on to P&L. So income statement, now you know that your balance sheet is accurate, that feeds your income statement. So generally, the main part of the income statement you want to review is for errors, like things that have been entered incorrectly, or if there's things that you wanted to, if there's things that should actually be on your balance sheet and not quite an expense yet. So as you're going through your revenue, your income statement, you're going to start with your revenue, and you just want to compare your revenue with your budget, your expectations, and then also compare with the prior year of this same period. So like April 2021, right? To see if sales grew or if they didn't grow. And then making sure that just seems reasonable to you based on the knowledge of your company. Our industry is cyclical. So comparing sales to the prior month doesn't necessarily mean anything, unless maybe you're in like a July and August timeframe where generally, depending on events happen, they could be similar. But yeah, like especially in March, you don't want to be comparing, April and March, because April's when things kind of start to pick up. So you want to make sure that you're comparing your March results to March of last year. Okay, COGS, analyzing and reviewing your cost of goods sold as a percentage of revenue by major category and business line. So you typically should have your business lines broken out. So you want to have a section for your wholesale or your production, and then you want to have a section for your tap room. So you'll have revenue like packaged and kegged for production, and then you'll have revenue draft and off-premise sales for your tap room, and then food and merch and stuff like that. And then you'll want to replicate that essentially for your cost of goods sold. So you want to make sure you're analyzing analyzing your cost by the percentage of revenue. And so I broke it out over here. This example just doesn't, I didn't want to have too much detail because it wouldn't fit and it would just be nonsense. But this specific example has ALC and non-ALC. And so, and they only do wholesale. So you're wanting to look at your COGS as a percentage of your revenue. So their ALC product, and I would, if it was me, this was not my setting up of the chart of accounts, I would break out ALC by package and keg, and I would break out non-ALC by package and kegs. So you're going to be looking at your COGS as a percentage of revenue. So you're seeing that 55% of your COGS, or COGS is 55% of your revenue, which means your margin is 45% on that product. So, and same with non-ALC, and then you'll always have like freight, but that's like your margin should be consistent. It doesn't matter what month it is. Your margin should generally be, or your margin, especially for direct product costs, so not including labor and overhead, should be really consistent unless you've had changes that you know about. For example, increasing raw materials. If your raw materials expenses increase, you know your margins are going to be a little bit less. But this is a great indicator to just review on a monthly basis. I usually keep a spreadsheet that's just a running list, and every month I add a column. So then I automatically have what happened in the prior months, and I can compare those percentages to the prior month. And then just looking at your overall gross margin, does it make sense based on what happened during the month? Sometimes, you know, included under your direct product cost, you'll have your direct labor, any other payroll items. You'll also have supplies or adjuncts and lab supplies, tools. So you'll also have inventory adjustments in here, which is not in here. I condensed it for the purposes of this, but you'll also have any inventory adjustments. So WIP loss, or like we talked about, inventory accounting adjustments, they'll all flow through COGS. So you'll have those in here as well. And then you'll have your total cost and then your total profit margin. So in March, their profit margin was 38%. So this, again, you'll have all your previous months lined up so you can analyze each one of those months. So looking at, obviously, gross margin, again, as a percentage of revenue. And then below the line expenses. So I'm sure y'all have heard that term before. If you haven't, it just means anything that's below your gross margin. So it's going to be all your operating expenses, your sales and marketing expenses, and also your like general taproom expenses. So repairs and maintenance and supplies will all fall, quote unquote, below the line. So with those items, sometimes they won't be as consistent month to month, and they're not going to be as cyclical in nature as the above the line expenses. So here you're really just wanting to review for significant variances compared to prior periods, like why did something increase by $5,000 one month? And is that accurate? Like for repairs and maintenance is a big one. Maybe something was recorded there that actually should have been recorded to fixed asset. So just reviewing for accuracy more or less. And then you get to the bottom of your P&L and you get to your current year net income. And you know, you'll also have your other items, which is like below the line. But in your other items, you'll have interest expense, interest income, depreciation. So typically when you hear people refer to EBITDA, interest before earnings, taxes, depreciation, amortization, they're talking about operating profit. When I'm reviewing a P&L with any of my clients, I more or less ignore these items. They're completely out of your control. Depreciation obviously is not related to actual cash flow at all. So I'm always looking at, I just clicked on it, the operating profit line. Okay, congratulations, y'all made it through. Income statement, P&L review. And then, like I said before, your cash flow is built off of your net income and also changes within your balance sheet. So you should be able to build that or pull it from your system fairly easily. So, but making sure these two things are accurate will really drive your cash flow, and your cash flow will tell you, you know, how much cash you're using within the month. So I'm not going to go into detail, so we have a few minutes of Q&A, but this is month-end close checklist. It's kind of a summary of everything that we talked about. It's high level. It's not going into the details, but you know, I'll share this with Sean. So, and Sean, feel free to post this if you want to post it or whatever you want to do. If you guys want this, and feel free to email me. I can send this to you separately as well. But if you want a copy of this, then you're more than welcome. It just summarizes what we chatted about. Okay, so my info is on the screen, but Sean has my contact info as well. Feel free, like I said, I'm more than happy right now to answer questions, but if there's something you think about afterwards that is maybe completely unrelated to month end, feel free to shoot me an email. I'm more than happy to answer anything. So do you guys have any questions for me?
If you guys want to have any questions or think of them later, I can always pass them on to Mel as well. And then she'll send me this deck and I'll post, along with this video, I'll also post the PDFs so people have access to it.
I do have a question talking about keg deposits, because that's a big part of our business with the distributors. So
Yeah.
how do these get handled exactly?
So you're using Eclose, right?
Yes.
Okay, perfect. So on your invoices that go to your distributors, there should be a standard, industry standard is $30. So I'm not sure what yours is, but
Well, we use two actually, 30 and 40.
oh, okay. So
Yeah.
those should be on your AR invoices, and so it'll should be related. It'll show on there that's like, here's how many keg.
100%.
Okay, perfect. And then Eclose, as long as it's set up as a keg deposit, it's automatically filling in on your AR invoices. Eclose will track it for you. I can't remember the exact report it is, but then when y'all receive those kegs back, whoever is counting in the kegs should right away issue an AR credit memo for the number of kegs that came back and separate it out by those two different.
So we do it two different ways. We issue it back on an invoice, an upcoming invoice. So there's a issue a credit memo that gets done on the invoice, but then other distributors want an actual separate credit memo that gets put in. But I always feel like the balance of kegs from, the deposit keg receipt thing is never quite accurate, with these guys.
Really?
Yeah, I always feel like there's this big number that's floating out there that seems like there's way more kegs out in the market or something. I don't know.
It would be interesting. So when I worked at a brewery, this was like years and years and years ago, but and we were using Eclose. We did essentially, like, because we had never really analyzed it super closely, we did like a baseline. We counted all the kegs we had in-house that included, finished goods. And then we, because we had like a listing essentially of like how many kegs we should have. And then we pulled that report in Eclose that says like, here are all the kegs you have outstanding. It'll show you by distributor. And you can also, like, I don't know if you have, specific salespeople per territory, or if you're just managing that on your own, but and just like reviewing that for like reasonableness, basically, like, does this look okay for this distributor? Should they have this number of kegs out to them? If the answer to that is no, then distributors usually, depending on, usually have that information as well. So you can reach out to your distributor and say like, hey, do you guys have a list of kegs out in the market? And if they can provide that information to you easily, then you can kind of compare to what you have. And then if it hasn't been reconciled, I would 100% believe there are going to be variances.
Yeah, no, there's definitely going to be variances, because you're going to lose keg in the market occasionally. Other distributors.
Yeah, exactly.
Or,
it happens.
There's no way around it.
Yeah, more frequently. Do you guys own your kegs or lease or combo?
We own our kegs.
Yeah.
We're doing all local. If I ever go out of state or in a different part of the state, I'd probably start leasing some, just because you just don't get them back.
Yeah, exactly.
And plus you have to float all these kegs out there, so it doesn't make a whole lot of sense. But how that number is. There's a report at Eclose that shows that.
If you send me an email and I can pull the exact, I can go in and do like a screenshot of the report and send it over to you.
Okay. I can look for it, and I can always ask Ecos too, as well.
Yeah.
What's your?
What's my email?
Yeah, I didn't
Yeah,
see
so
it.
it's M Smith, at least my name's easy, at perkinsaccounting.com. Yeah, kegs is always a tricky one. And the biggest thing too is as you're looking at your keg deposits and analyzing any variances you see, the next step is actually going into your fixed asset, your keg fixed asset, and seeing how many keg fixed assets do I have recorded. Generally, they depreciate relatively quickly. So you might not have like, your actual value of kegs, your net value with including accumulated depreciation this might not be relevant, but you'll at least want to clean up your fixed assets, whether if that's your, the tax accountant doing that at the end of the year, making sure you're like, well, actually, we've lost so many of these kegs out in the market. So we just need to clean up our fixed assets and remove them from the books.
Okay, sounds good. All right.
Okay. Well, I appreciate your time. And I mean, in all honesty, hit me up if y'all need anything.
Okay, thank you.
Yeah.
I definitely will. Thanks. This was useful. This is Andrea. I'm gonna watch the recording since I was driving.
Yep. Yeah. And
oh yeah. Sorry you couldn't see the slides.
But I'll also post the deck, Andrea, so you'll be able to see it.
Great. Thanks. Very helpful.
And again, if you guys
Bye,
need,
everyone. Have a great weekend.
Yeah, if there's anything else you guys have ideas or you guys would like, more information on, I'm more than happy to do another one of these. So
sure.
All right.
Okay.
Thank you. Have a great weekend.
Thanks
You
a lot,
too,
guys.
Sean. Have fun.
Well, thank you so much.
Thanks, guys. Have a great weekend.
You too.
Thank you. Bye. Guys.